So the earnings season kicks off today, and we've put together what several brokerages are expecting this time around. So first from CLSA, they expect a good quarter except for commodities, and the sectors where they see strong growth include autos, discretionaries, power, and then the financials led by banks. They also think that IT and staples will see reasonable growth in Q4. Moving on to Kotak then, they expect net profit to rise 9% on a year-over-year basis as well as 8% sequentially. And on the EPS estimates, they see 806. This is for FY23 for the full year and FY24 at 916 rupees. Moving on to Bank of America then, they believe that the street's earnings estimates for both FY24 as well as FY25 could actually be cut in half on high inflation rates and then slowing demand like we've been talking about. So for both of those years, they're factoring quite a cut coming through. Next up on Citi, they've put together a note on several individual sectors. For the autos, they see margins expanding. This is owing to higher volumes as well as lower commodity costs, which will bode well for the sector. Lenders also, Citi believe, will have a good quarter with strong advances growth as well as continued NIM expansion. So that is on the lenders. For the cement pack, then, they also expect a sequential improvement this time around. They're expecting higher EBITDA per ton, so that's good on cement. On IT and pharma, they're not expected to have a great quarter. We've been talking about this. Citi sees constant currency growth at 1.8 to 0.9. That's minus 1.8 to 0.9%. But the big focus for IT will definitely be on the guidance. What are they saying about the coming year? Pharma then could be quite flat, barring just some fluctuations around Revlimid, but we may see margins being supported this time by some moderation in US pricing. So keep an eye out on that. On capital goods, Citi is focusing on commentary largely on capex, on orders, as well as exports. Those are the big areas to watch. And for staples, while they are expecting slightly better demand this time around, the commentary once again will be very important, especially on how the rural picture is looking and also what is the deal with price cuts now. So that is important as well. Lastly, on the telecom sector, Citi expects, and is working with some kind of estimates of just marginal growth for ARPUs. That's on overall, how the sectors could fare this time. I'm going to wind down with just JP Morgan's list of candidates for upgrades and downgrades. So on low Q4 and FY24 estimates, they think that Kotak Mahindra Bank, Power Grid, Torrent Power, Indian Hotels and Power Finance are the stocks which could see some upgrades come through. And on the opposite, that means high expectations in Q4 as well as for all of FY24. They think Bharti Airtel, Asian Paints, Ultratech Cement, JSW Steel and Adani Ports are perhaps some stocks which could see downgrades this time around.